Hello. U.S. stock futures are trading slightly lower today following the rally that took place at the beginning of last week. Traders who had anticipated the slowdown of the U.S. labor market had taken their profit at the end of the week after the jobs report, and it seems that the motion is ongoing today. Despite the fact that the majority of the market expects the Fed to keep rates steady at their next meeting on September 20th, expectations for the start of the rate cut cycle are being pushed back as sentiment remains foggy. Goldman Sachs has lowered the probability of a U.S. recession from 20% to 15%, citing positive inflation data and last week's labor market report. Analysts at the investment bank highlighted Fed Chair Jerome Powell's current careful approach to future rate decisions, arguing it is a signal that the December hike is off the table, adding that the case against a November increase is also significant. Commodity prices are under pressure from the resilience of the U.S. Treasury bond yields. Despite signs that inflation is cooling, the 10-year bond yield remains close to the 4.2% level. Gold is seeing its fourth consecutive day of losses, while silver has lost over 5% in the last 5 trading days. Copper and petrol are also declining on the latest Chinese data, showing the softest increase in services activity since the start of the year. SoftBank's ARM Holdings is planning to ask investors to pay $47 to $51 per share when it begins marketing its initial public offering next week. This would translate into a valuation of roughly $50 billion and $54 billion, making ARM the most valuable company to list in New York since Rivian debuted in 2021. This valuation, however, represents a decline from the $64 billion at which SoftBank acquired the 25% stake in the company it did not already own. This decrease shows a recent drop in demand for some of ARM's offerings. As Phillip Capital Team, we wish you happy and healthy days.